What if I told you that with just $1 million in a portfolio, you could generate $10,000 to $50,000 a month in income? And it's not dividends, it's not cover calls, and it's not sitting in front of your screen all day trading. If you are a high income earner with $1 million or more in investable assets, and you're tired of watching your money produce nothing for you and just sit in the market hoping it grows, this breakdown is specifically for you. Now, if you are not familiar with who I am, my name is Stephen Brooks. I'm a hedge fund manager who specializes in income-generating strategies, mostly on options in the S&P 500 index. Now, $10,000 to $50,000 a month on $1 million portfolio is a bold claim. That's 1% to 5% per month. And you're probably sitting there saying, there's no way that's possible. This guy's lying. Because the reality is, you've probably done the buy and hold model for a long time now. Inflation runs at 4% to 5% per year. GDP grows at 1% to 2% per year. That gets you your 6% to 8% annualized returns. And if you are in an index fund right now, the cash flow that you're receiving is somewhere between 1% and 1.5% per year. So I get it. You're skeptical, and you should be. So here you can see that over the past 6 months, while the S&P 500 is down, our portfolio is up almost 18%. And this is not an unrealized gain either. In fact, we trade exclusively 0 DTE options on the S&P 500, which means at the end of every single trading day, we are in no positions and 100% in cash. Now, many investors looking for cash flow will explore different approaches. For the purposes of this video, let's just focus on the stock market. The first thing most people turn to is dividend investing. And as I mentioned earlier, on the S&P 500 index fund that you're looking at right now, that's a 1% to 1.5% dividend annually. That's not going to get you to 1% to 5% per month. Then there are income ETFs like JEPI, the JP Morgan Income ETF. Those do boost much higher yields, or boast much higher yields, 7.5% to 8.5% annually, but in many cases, the distributions you are receiving are not dividends. They are simply a return of your own capital. And that's a big reason why, as you can see here on the screen, there's very little price appreciation. On the top, we can see JEPI. Over the past year, yes, it got you that 7.5% to 8.5% yield. It's not a dividend because most of it is a return of capital, but there was only 2% of appreciation over the past year compared to the S&P 500 with over a 21% appreciation. So you actually left a lot of money on the table going for that JEPI specialized income ETF as opposed to just the buy and hold model. And then, of course, there's day trading. And I'll be straight with you. Day trading is a coin flip. It's a 50-50 bet. And once you layer in things like commissions, slippage, and human emotion, your expectancy will drop well below 50% in the majority of cases. I've been doing this for 15 years now, and I've never seen a consistent day trader. Not one. Anyone who says they are is lying to you. But you probably already knew that by now. So what has worked extremely well for me is systematic options. And the best way I can describe it is to think of an insurance company, right? An insurance company sells hurricane insurance. They sell homeowners insurance. They sell car insurance. They sell life insurance. And they put a markup on every single one of those policies because they're taking on more risk than the person buying that coverage. But here's what makes the model work. They do it in a way that is uncorrelated. If they're selling homeowners insurance in Maine and car insurance in Texas, and a blizzard hits in Maine, that has absolutely no bearing on what drivers in Texas are going to do. Those are two completely separate risks. So when an insurance company sells many different types of insurance, all with a markup for taking on risk, the losses in one area rarely affect the others. That's exactly what we do in the S&P 500 index. We sell multiple different types of options insurance throughout the trading day, anywhere from 20 to 50 times a day, and we collect a markup on every single one of those because we are taking on more risk than the person buying it from us. And just like the insurance company, those trades are not correlated to one another. For example, if we determined there is a markup available for selling insurance right when the market opens at 9:30, we'll take that trade. And if we determine there's another markup available, let's say later on the day at 3:55 before the markup closes, we'll take that one too. Now, in many cases, we'll do a lot more than those two, but here's the point. What happens at 9:30 when the market opens has absolutely no bearing on what happens at 3:55 when the market is about to close. They're completely separate and uncorrelated trades. And the best part is, it's 2026. All of this can be automated. In fact, so far this year, I've only placed 2 manual trades myself. And the one thing that I know most market participants are always thinking about is, will this ever work in the future? Will it continue to work in the future? Yes, past performance is not indicative of future results, but that's all we have to deal with. So, how do we answer that question? Well, ask yourself this. Do you think market participants will want to insure their positions in the future? If the answer is yes, then odds favor this continuing to be an effective and attractive strategy for years to come. So there are 2 ways to get started on this if these type of returns and this type of strategy interest you. Number 1, if you want to invest with us in our fund that is already doing this every single day, you must be an accredited investor. There will be a link below this video where you can explore that further. All we do is we run multiple automated strategies 20 to 50 times a day where we require a markup for taking on risk in an uncorrelated fashion, and we are in 100% cash at market close every single day. Number 2, if you'd like to learn how to find these strategies yourself, identify these edges, and have software execute all the trades for you automatically, there will be a link below this video where you can learn more.